Hello, my name is Randy Wostratzky, Director of Development here at the Spectrem Group. Thanks for joining me as we review Spectrem's Affluent and Millionaire Investor Confidence Indices for the month of February 2014. The confidence with which affluent investors greeted the new year took a hit in February as the Spectrem Affluent Investor Confidence Index fell 9 points to -2, a 4-month low. The Spectrem Millionaire Investor Confidence Index dropped 12 points to 5. This is the largest month-to-month drop since October, when the Millionaire Investor Confidence Index fell 15 points. The indices measure the investment confidence and outlook of households with more than $500,000 of investable assets and more than $1 million of investable assets, respectively. Year to year, the indices are up. The Spectrem Affluent Investor Confidence Index was at -7 in February 2013, while the Millionaire Index was at +1. The February indices were compiled in the midst of market volatility, tumult in emerging markets, and uncertainty about what, if any, further actions the Federal Reserve would take under new Chair Janet Yellen in regards to our stimulus program. The downturn in the indices in February was reflected in how affluent investors tend to invest in the coming month. Overall, they were leaning significantly toward retreating to the sidelines. This attitude was especially prevalent among non-millionaires. The Spectrem Affluent Household Outlook, a separate monthly survey that measures confidence in 4 financial factors that impact affluent respondents' daily lives, declined for the 3rd consecutive month. A drop in confidence in the economy recorded the largest month-to-month decline since last October. Affluent investors pride themselves on their financial knowledge. Since the economic collapse and through the prolonged recovery, they have become more proactive in doing independent financial research and keeping abreast of news that could impact their portfolio. Not surprisingly, stock market conditions is the news story that affluent investors say is currently most affecting their economic outlook. When asked how they intend to invest in the coming month, affluent investors indicated a retreat to the sidelines, an indication of skittishness, especially among non-millionaires that we surveyed, over market volatility thus far in the new year. Not investing as a response gained 11.32 points to 42.32, according to our monthly investment preferences survey. This is the biggest month-to-month gain in 4 months, and just slightly less than the 43.8 reading in February of 2013. Stock mutual funds continue to be affluent investors' investment vehicle of choice, though this reading dropped 11.88 points to 31.29, basically unchanged from the reading exactly 1 year ago. Intention to invest in cash in the coming months dipped 2.99 points in February to 20.18. This is slightly higher than 1 year ago, when the reading was 18.3, and an indication of a creeping conservative investment mindset. Bond mutual funds dropped 4.88 points to 11.88, while bonds gained 2.55 points to 7.26, a 5-month high. For both millionaires and non-millionaire investors, stock mutual funds and stocks will be the investment vehicles of choice in the coming month, although for millionaires, both categories did suffer double-digit drops. Stock mutual funds dropped 13.2 points to 36.9, while stocks dropped 14.3 points to 29.1.